Welcome to the Plan Solutions Incorporated podcast, where we give facts and insight on the latest happenings in the world of economics, financial markets, and personal finance. Plan Solutions provides advice on a variety of financial topics, including investment management, tax preparation and planning, and retirement planning. Chase has 25 years of experience in the financial industry, holds a certified financial planner and chartered financial analyst designations, and has earned a master's degree in taxation and a doctorate in business administration. Chase has a passion for helping clients down the path toward their financial goals. And I'm Jason LaChance. And on this episode, we're going to discuss pay down debt or invest for the future. U.S. job market remains strong, power of attorney, and a look at the Plan Solutions Incorporated office bulletin board. Mr. Armour, how are we doing, good sir?
Doing well, although it's supposed to, top triple digits here in Sacramento. So I've had a pretty mild summer so far, which has been nice. And the 4th was great weather, but it feels like that Sacramento summer is finally here, where it's going to be pretty unbearable.
Yeah, I thought maybe we were going to miss it, but nope, not happening. So, all right, well, let's take a look and dive right in. Pay down debt or invest for the future. A common dilemma for many households and individuals, and there really isn't a one-size-fits-all answer to it. And there's all kinds of techniques around paying down debt and things like that are out there. But, what do we really want people to understand?
Yeah, a lot of the ideas for these topics just come from questions we're getting from clients, right? And if you hear it a few times, you start thinking, okay, if I've had several people ask me about it and we've had a long conversation, there's probably other people that maybe are thinking it, but haven't had a chance to ask yet. And so thought, it's worth exploring. The common thing I get is, hey, I've been, saving, my savings is built up to more than I need for an emergency fund. What should I do with this money, right? Should I pay down this debt that I have, or should I, invest for the long term towards these longer term goals? And as you said, the challenge is there really is no right answer. There's a lot of different considerations that really, depend on what those long-term goals are and what that investment strategy would look like. What debt is it that maybe you'd be paying off, and what the interest rates are there. And as well as just like what type of investments and what type of debt and tax implications and things like that. So, usually where we'd start is you just look at, the cost benefit of each option. Benjamin Franklin wrote, a penny saved is a penny earned, right? So, if you can, save a penny in interest, that's the same as getting that much as a rate of return. And so you can kind of in a real rough way, just compare the two. You could say, what's the expected rate of return on investing for the future? And what's the interest rate on the debt, right? And that's the way a lot of people approach it. But then, that's when these intricacies start coming in. For example, a investment might have a higher expected average rate of return, but of course it's going to come with some risk, right? There's going to be volatility as to that rate of return. And, as we've seen in investment markets, there can be time periods where you get, really great results. And then there can be long time periods where it doesn't do well and you really don't make a lot of return, right? And so that's the risk is those returns don't come on a set schedule. So if you have an investment that's higher volatility, you have to demand a higher rate of return to account for that risk, right? You have to have this risk premium. So you really want to weigh the expected return on the investment, assuming a reasonable risk premium compared to the interest rate that you would be paying on the debt, to really get kind of an apples to apples comparison of which one may be the better option on where to allocate additional financial resources.
Yeah, that makes me think of a situation that I believe we conversed about, where it was individual could have paid off their house, but it didn't make any sense. It made more sense to invest and get a greater return than pay off their house because of their mortgage interest rate at that time. So it was just weighing out the apples and oranges. It just made more sense to not pay off the home debt, although, I mean, that's a good debt, a depreciating value, but it just made more sense, and there was going to be a greater return on the other side to invest and hold off on paying off that home.
Yeah, you make a great point. And here's a case where, it could be, do I pay off my mortgage or not? Well, that depends on when you got your mortgage too, right? People that have the very low interest rate mortgages pre the kind of flare up in inflation, post COVID, they may want to hold on to that low interest rate mortgage, and it may be better off doing other things with the money than paying off that very low interest rate. On the other hand, if you have a more recent mortgage and you're paying 6.5%, now maybe that is something that you want to pay down because that's much more expensive money. So weighing that interest rate, and then of course that feeds into the other aspect, which is taxes, right? Taxes can have an implication. So yeah, if they're in a position where they're able to get a tax deduction for that mortgage interest, then that lowers the after tax cost of that debt by that much. Now, you know, given the way the tax code works and the higher standard deduction, and even some of the changes that have happened recently, which we will be talking about in future podcasts, they may not be getting the full benefit of tax deductibility for that interest. So, being able to do those calculations and weigh that. But yeah, anytime a debt, if the interest is tax deductible, that then lowers that real cost. Whereas you can look at it the same way with the investment side. If the money invested for the future would be funding long-term goals like retirement, potentially that money could go into a tax-deferred retirement account, such as an IRA or 401k type account, where you get a tax deduction. And because there's annual limits, if you don't take full advantage of that in a given year, then you lost that potential. And so it may be, oh, well, it's worth taking full advantage of that tax deduction before thinking about shifting things to paying down debt, just because that tax deductibility, the long-term tax plan could be really valuable.
Yeah, well, and as you outline in the personal financial review, put the individual or married couple in a situation of paying more taxes than they needed to.
Yeah, yeah. I mean, being tax efficient is a big part of the game, right? We want to keep as much of people's financial resources to fund their goals as we can. And if we can do that by reducing taxes as opposed to, taking from other goals or other spending, then it's not nearly as painful.
Yeah. Well, let's dig into the area of 401k. As you had mentioned, oftentimes as part of a package for by an employer, an individual might get a 401k option when which the employer is doing matching. I mean, that's a wonderful thing to take full advantage of.
Absolutely. Yeah. I mean, it's basically free money. And so you need to take that into consideration because, again, you may have, let's say moderate interest rate debt that could be paid off, but it might be that if you allocated more of that money to the 401k and you get a match where, let's say, for every $2 you put in, the employer's putting in $1. I mean, that's a 50% return on your money, which obviously, unless it's really, really high interest rate debt, you're getting you're coming out ahead in that deal. So it may be better to allocate it more towards saving, at least until you've gotten the full benefit of that match.
Yeah.
And then the other thing too is kind of look at, potentially how things will change. You might have, moderate interest rate debt and, could pay it down. But, there may be the potential to refinance that debt at a lower interest rate in the future as well. So do you want to pay down that debt when, maybe it's somewhat expensive now, but down the road you could, you could reduce that expense. Meanwhile, still capturing strong returns on the investment so that it's not static. It's not a, one moment in time type decision. You have to think of it as, kind of an ongoing timeline and how things may fluctuate or change. And to have really in finance, we'd call that the option value,
Mm.
right? The value of being able to change strategy midway to take advantage of an opportunity. And those options, do have some value that need to be taken into account.
Where do time horizons for goals also come into play in this decision making?
Yes. So, you have to look at, taking investment options, right? If people, choose to, allocate additional resources and save for long-term goals, that money may be invested fairly aggressively. Well, if it ends up that they may need the money in the short term, that might not be the best strategy because there's the potential that the market could be down when they need the money, or you could have certain lockup periods, or maybe it could be subject to a penalty if it's access before retirement or before a certain age. So you want to take those time horizons into account. In those cases where that money might be needed, it may be beneficial to pay down debt, assuming the money could be borrowed again, right? So if you have like revolving credit, like a personal loan or credit cards, well, you could always pay those down. And then if there was suddenly a need for money, you could borrow again, but at least you would save the interest in the short term. On the flip side, something like a low interest rate mortgage, you may not want to pay that down because the only way you could then get the money back out is to refinance into a higher rate mortgage or take out a higher interest rate home equity loan, right? So, in that case, maybe a more appropriate low risk type investment would be the better fit. Because the amount that you would save in interest in the short term may be negated by a higher amount you'd pay in interest in the long term. Or, just the lack of accessibility of the funds could end up costing you more overall.
Yeah. So many factors to weigh out in making the best or optimal decision. What else do you want to add in closing? It's a complex process.
Yeah, it's very individualized, because everyone's situation is unique. What debts they may have, what investment strategies and long-term goals they may have are different. So it's really, something where people should weigh, the factors that we listed plus others. That this is not an exhaustive list, and at least weigh it for themselves, or talk with a professional to really go through and say, okay, what's the best strategy for their individual situation?
All right, let's jump to U.S. job market remains strong. The June jobs report came in higher than expected, with the Bureau of Labor Statistics estimating the U.S. added 147,000 non-farm jobs for the month. Also, the unemployment rate declined from 4.3% to 4.1% in June. This is a good sign. I mean, it wasn't necessarily what was being expected or projected.
Yeah, yeah, better than what was expected, and kind of a continuation of what we've seen. We've had this expectation that we are going to see, job cuts, weaker job market. Even I think we talked last month that the overall report looked good, but when you kind of dug into the details, you saw maybe a little bit of weakness, right? So that was some concerns of that kind of an early sign of a weaker trend going forward. But with the most recent report, it really doesn't look that way. We've seen strong job growth continue. Um, and what's interesting is, there was a real expectation that we'd see a decline in the federal government workforce, that there would be some cuts, but actually, total government employment, which includes federal, but also state and local governments, was about half of the increase, about 73,000 jobs, which
Hmm.
which was up from prior periods. While private payrolls increased approximately the same amount, 74,000 for the month. So we haven't really seen a loss in federal jobs come through. In fact, if anything, or if there was, then it's been more than offset by state and local hiring. And if anything, this report reflected an increase, a move up in the number of government jobs added.
Yeah, no, it's very interesting that is what occurred. Not what I expected when I started digging in and reading. What is the biggest contributor to the increase in private payroll?
Yeah, so here was the other interesting thing, because there's been a lot of talk about, that, oh yeah, jobs are being added, but typically in lower income type segments, right? And the one that's usually pointed out is leisure and hospitality, which has, I mean, really got hit really hard during the pandemic, and then of course came back, and in general has been a fairly strong category. But this time around, it was one of the bigger increases at 20,000 jobs. But what I think was more interesting is that private education and healthcare showed an increase of 51,000 jobs. And, typically, especially healthcare, I don't think of those as low paying jobs, right? Those are, and we continue to see just really strong hiring there that's been part of a longer term trend. So, I don't think we can say it's just low income jobs. I mean, there obviously are a fair amount of lower income jobs that are being added, but I think we're also seeing a fair amount of job creation on the higher end.
Yeah, no, that's really interesting. And when we say private education, can you give some insight in what they consider that being? Is that just private educational institutions? Yeah.
Yeah, I mean, it can be pretty broad. It basically, the way to think about it is if you think of education as a sector, right? Subtract out the state and youth university systems that are that are government run, where the employees are technically government employees. Take out the public school districts, right, where the teachers are technically government employees. It's basically everything else within that sector.
Mm.
But it is the much smaller portion. It is kind of odd, I will say. I mean, for somebody who's studied, labor markets and done, presentations on them for years, it is kind of bizarre the way that we categorize some of these jobs, right? Because, I mean, who would lump together as one category private education and healthcare?
Right.
But the truth is, the private education portion of that is actually very small, right?
Mm.
Whereas the healthcare industry in this country is really big. So without, digging in, the increase of 51,000 jobs, you'd have to think most of that is coming from healthcare, which has been historically a strong sector, and maybe seeing some growth in private education, but it's probably pretty small just because it's such a small segment of the overall labor market.
Right. Well, what areas did we see stay pretty flat and any sort of decline?
Yeah, so we saw manufacturing decline, right? So that kind of goes counter to the idea of wanting to really help U.S. manufacturing. But in total, we saw about 7,000 jobs lost for the month. And we also saw about 7,000 decline in one of these other catch-all categories that's business and professional services. Other than the one small category that's other services, basically things that can't be defined. Business and professional services is like it's about as broad of a catch-all category to encapsulate all of these different jobs that don't fall neatly into one category, right? I mean, when's the last time you asked someone what they do for a living and they said business or professional, but it's just a catch-all that captures a lot of managerial type positions, but also consulting and things like that, and is not one of the, well, actually does tend to be one of the larger categories, but it's not really focused into any one area of the economy. It's kind of a broad microcosm across many sectors.
Right. Yeah. Thanks for the clarification. I mean, but we've had a pretty good sign. The U.S. Has added an average of 150,000 jobs per month over the last year. So, I mean, it seems that we are on a healthy incline, nice and steady economically.
Yeah, basically nice and steady. Great way to put it. I mean, this latest report was 147,000 jobs. We've averaged 150. We've had some months a little above, a little below. Haven't really had any big blowout months to the upside, and haven't really had any big, months that disappointed in a big way. And despite that, this latest report showed a strong growth in government jobs. Most of it over the last year has been in the private sector, most of it in the services economy as opposed to the goods producing. Private education and healthcare has consistently been in the lead, followed by leisure and hospitality. So kind of a barbell there between, higher income and lower income jobs. So really, you could just argue the most recent report is just a continuation of the previous economic trends that we've seen that really haven't changed or been deterred despite some of the changes in policy that we've seen, over the last 6 months.
Yeah. Anything else you want to add before we move to power of attorney?
Well, just that this is an area that we'll continue to monitor, right? I mean, I think the job market is is a real focus. It's always a big part of the economy. It's a big part of Federal Reserve policy, and arguably this strong jobs maybe makes the Fed a little more hesitant to lower interest rates, right? Because typically they would lower interest rates to boost the labor market, support the labor market, and they would raise interest rates to fight inflation. Well, we've seen a strong labor market and falling inflation, so kind of both of their goals are being reflected without them having really done anything for the last 6 months. So I think some of the speculation that the Fed may lower interest rates in July, this probably pushes that out maybe to September, becomes the new meeting that we'll focus on, just because the data doesn't show that there's any reason they should really be compelled to have to move when so far all of the main metrics, right, their dual mandate is working out quite well.
Yeah. Yeah. An interesting sign. We'll, as you said, continue to monitor and watch what changes come our way. All right. Power of attorney. A power of attorney, or POA, is a legal document that gives one person the power to act for another. We've talked about this in past incidences concerning, estates and things of that nature. What do we wanted to really give the listener as far as the overall scope of what a power of attorney is, maybe understanding, especially if they end up in a situation where they're the one that is the person that is being put in the position of power of attorney and making those decisions for a loved one.
Right. Yeah. When it comes to estate planning, this is the area that's just most often overlooked, right? When people think estate planning, they think, okay, who gets my money and when and how when I die?
Hmm.
And typically the idea is you got your will, probably a trust to go with it. And it's just, okay, I'm gone. What do I want to happen? And, in some cases, you hear people say, I don't care. I'm not going to be around, right? It's not going to affect me one bit. But the part that they often forget about is the financial power of attorney and the healthcare power of attorney.
Hmm.
And those are there, for when you're still around, right? It's if you become incapacitated or in some way aren't able to pay your bills or make healthcare decisions for yourself, who makes those decisions? And, as a planner who's trying to look out for my clients, that's typically the piece that I'm more concerned about, right? I want to make sure that if in their old age they get Alzheimer's or they're struggling with certain things that they're taken care of. Um, I could kind of agree with some, the things after death, that's just following instructions. And at that point, it's not really going to affect our client, truthfully, one way or the other. It's just a process of making sure their wishes are fulfilled. But these are things that can affect their day to day. And that's why they're important documents to review that I think too often kind of get skipped over, right? As you said, who are you going to name as the
Yeah.
financial power of attorney or the healthcare power of attorney? Who do you have that you trust that will have your best interest in mind, that ideally has some skill in those areas, right? Some knowledge of finance, some knowledge of healthcare and how our system works, so that they can make good, informed decisions in your place. Do they know that they've been assigned that responsibility? Are they comfortable with taking that on? Or, if you don't have someone that can fill that position, should you look at having a professional do it where they have that skill set and, you can have a meeting so they understand what your what your desires are, and you have someone that at least if not as the primary, as a backup that can step in and make sure all of that's taken care of.
Yeah, it's a challenging situation for many, and having seen it firsthand. And yeah, it's always best, as you recommended, right, to have someone that has that knowledge.
Yeah, it's because for a lot of people it can be quite overwhelming when they end up in that position, right? They have this responsibility, but they're not really sure where to turn. And of course, in that situation, they could very well make mistakes as well because they're kind of learning on the job, versus maybe someone who's has the background, has done it multiple times, is not learning from experience, but really knows the processes to make sure everything's taken care of. So, just as with any estate plan, it should be reviewed regularly, but not just the will and the trust, but really these power of attorneys are I would argue, where the process should start, because that's likely. from my experience, going to have a bigger impact on an individual's life, well-being, standard of living than the decision of where to leave money after death.
Yes, sir. All right. Well, let's jump on over to the Plan Solutions Incorporated office bulletin board. We've got one item pinned up there this week. What is it, good sir?
Yeah, I mean, still looking at cybersecurity. Schwab's been doing a lot of webinars and things that we've been attending, and just always trying to keep one step ahead of the criminals, right? And the new ideas that they're coming up with. And I mean, it's just amazing when you look at identity theft and things, and how it's just outpaced so many other forms of fraud or theft. Mostly because it's just easier, right? It's easier, and it's easier to get away with for the criminals, and so we all have to be that much more careful in trying to counter these different tactics, and especially as things like AI, are allowing people to, copy people's voices, and use different tools in terms of social engineering to try and get us to do something that we should not be doing online that could compromise us. So, it's really important that people understand that this type of thing can happen to anyone. We take it very seriously. But we understand in that process, it means we may add some additional steps to certain transactions, right, to be safe. I know in today's world, we're so used to instant gratification, right? We want to, deposit money and invest it. We want to take a distribution because we're using money for something, and we just expect to be able to do those things very quickly. But one of the keys to avoiding, fraud or theft is to actually slow down the process a little bit, have those extra steps in place to confirm that this is a legitimate request, and make sure, to the best of our ability that somebody isn't being manipulated or money isn't being sent to the wrong place. And so, we just want to remind our clients that because of that, we don't accept, trade or distribution requests via email or text. In fact, we don't really do anything via text. People can email us, but we're going to always call to get verbal confirmation, and may even ask some, background questions to confirm that the person that we're talking to is in fact the, person that has authority over that account. It can, be a little bit inconvenient at times, but obviously if it, eliminates a major risk of something bad happening, it's worth it over time.
Absolutely. Well, and I just think that's wonderful that you folks continue to evolve with it at Plan Solutions, because I know I'd rather be slightly, I don't even look at it as inconvenience, but anything to mitigate any sort of risk, because I'm sure, much like the listener and yourself and all the clients of Plan Solutions, we've worked hard for what we've achieved, and I don't want to give it away like, to criminals. So, hey, I'm all up. You go ahead and authenticate all you need, which is always appreciated, because even me knowing you personally, it still happens. Even for me, if I call, it's still the same thing. The whole team knows me personally. They're still going to go through the same procedures that they need to do to properly make sure that my funds are protected.
Absolutely. And there's a lot of risks in life, right? I mean, there's a risk that my house may burn down. I think it's very low. I don't think it'll happen to me, but I still make that insurance premium every year, right? I still, allocate a little bit of resources, time and money to, one, create defensible space, two, make sure that I'm insured just in case, because that's such a major risk. And for a lot of people, their investment accounts are a significant portion of their net worth. And so, these few extra steps to try to do everything we can to protect that, is kind of akin to, okay, having that insurance, or creating defensible space around your house, so that if, for some reason you're the unlucky person that is targeted, there's a much higher probability that you will be able to avoid any loss.
Yes, sir. Absolutely. Anything you want to add before we wrap up this edition of the Plant Solutions Incorporated podcast?
Well, just as always, to any of our clients, with some of these topics that that we talk about. I know a lot of times when we cover things, I'll get questions back from clients. Oh, I saw that topic, and that brought up a question. So I always say if there's any questions or they need anything from us, feel free to give us a call, send us an email. We can follow up and talk about how any of these topics may affect them individually.
Absolutely. Well, we thank you for listening to the Plan Solutions Incorporated podcast. Please hit that follow button on whatever podcast platform you're on, be it Apple Podcasts, Spotify. Leave a rating, review, and please share with someone else that you think will get value out of the podcast. And if you'd like to follow along to a visual form of the podcast, you can go to our YouTube channel. That's youtube.com/@plansolutions and subscribe there. And if you have yet to subscribe to the Personal Financial Review, the written content that we discuss here on the podcast, send Katie an email. It's katie@plansolutions.com and get subscribed today.
The views and opinions expressed in this podcast should not be construed as an offer to buy or sell any securities. The information may not be current, and Plan Solutions has no obligation to provide an updates or changes. Plan Solutions does not make any representation or warranty as to the accuracy or completeness of the statements or any information contained in this podcast or any liability therefore, including in respect of direct, indirect, or consequential loss or damage, is expressly disclaimed. Plan Solutions is not providing any financial, economic, legal, accounting, or tax advice in this podcast. In addition, the receipt of this podcast by any listener is not to be taken as constituting the giving of investment advice by any Plan Solutions associate or individual to that listener, nor to constitute such person a client of Plan Solutions. Any reference to a specific company or security does not constitute a recommendation to buy, sell, hold, or directly invest in the company or its securities. Market indexes are unmanaged and cannot be invested in directly. All price references and market forecasts correspond to the date of this podcast.
Plan Solutions is a registered investment advisory firm.